Good morning and welcome to another episode of Always Up to Date. I'm Denise and this is Yahweh, and we are the co-owners of Always Bookkeeping. Today we're going to be talking about accounts payable. And so our quote for today is from Red Adair, who specialized in extinguishing and capping oil well fires. So the quote is, "If you think it's expensive to hire a professional to do the job, wait until you hire an amateur." The statistic that we have for you today is from Intuit, who are the makers of QuickBooks. They did a survey of small business owners and quizzed them on some basic business financial literacy questions, like, for example, the role of the balance sheet, accruals, and how to improve cash flow. 82% of the respondents scored less than 70% on the test. We're going to consider today a buyer who makes a purchase and takes delivery of the goods, but doesn't pay the seller immediately. The seller, therefore, is selling on credit. And as a result, the buyer and seller now have a credit-debtor relationship, which lasts until the buyer pays for the goods.
Okay. There are some questions here that you might want to ask when you're hiring a bookkeeper and regarding accounts payable. So first of all, how can a bookkeeper help you with accounts payable?
Yeah, good question. No one likes to hand out money, right? When you have a business, that's probably the hardest part, is actually sending out money to pay for things. It's a little bit stressful, but you can make it less stressful if you have a clear view of everything through your accounts payable.
Yeah.
So good bookkeeping can help you with your accounts payable by making sure that your payments are made on time, and especially that you don't pay the same supplier twice, or the same invoice twice.
Well, what is an accounts payable?
Yeah, so basically an accounts payable is a liability for an amount that's owed to a creditor for a purchase of goods or services. So anytime you buy something and you don't pay for it right away, it becomes an account payable on your books.
Where do I record accounts payable?
Yeah, so similar to accounts receivable, accounts payable is recorded on your balance sheet. The difference, though, is that accounts payable is considered a liability. It's a short-term debt or a liability. So this unpaid purchase stays in accounts payable for the life of the debt. So once you pay that accounts payable, then the balance decreases by that amount.
And accounts payable are a little bit more, like you said, like it's short-term borrowing, so it should be separate from your loan payments and your other financing payments or lease payments.
Yeah.
What happens when the buyer pays his accounts payable?
So when the buyer pays an invoice from a seller, the buyer uses cash. So the buyer's accounts payable is going to decrease, but your cash account is going to decrease as well. So prior to doing that, so once the buyer purchases goods on credit, the accounts payable on the balance sheet is credited, and then another account is debited.
Yeah.
So that other account might be an asset or an expense account. So if you buy office supplies or whatever, you're going to see a debit to your office supply account.
Yeah. What documents help me to know that the accounts payable are legitimate and accurate?
Yeah,
That's
so
a question.
Yeah. So there's a few different documents that you're going to need to keep track of your accounts payable. So there's purchase orders, which are issued by your company. There's receiving reports, invoices by the vendor, contracts and agreements. All of those things are going to help you. A well-run accounts payable process will include timely processing of accurate and legitimate vendor invoices, accurate recording in the appropriate general ledger account, and the accrual of obligations and expenses that have not yet been completely processed.
Absolutely, and it's very important to take into account your accounts payable, not just because you need to pay these peoples, but sometimes you have debts that will require debt covenant that will need a debt to equity ratio.
Yeah.
Accounts payable is something that you can control more easily by means of paying it and not accumulating more.
Right.
So I think it is very important, and it should be taken into consideration as well if you're looking at your financial statements and you have that debt covenant existing from your loan.
Yeah. Good point.
What is a purchase order?
Yeah, so a purchase order is prepared by your company to communicate and document precisely what you're ordering from the vendor. So the purchase order, often called a PO, should include purchase order number, the date that it was prepared, the company name, the vendor name, the name and phone number of a contact person, and a description of the item that's being purchased. You also want the quantity, the unit price, the shipping method, the date that it's needed, and anything else that might be pertinent to that purchase.
And just bear in mind that purchase orders, even though you're recording it in your accounting software, these are non-posting transactions. So if you do have a purchase order that you have in your QuickBooks file, it might not necessarily show up right away on your books. So just bear that in mind, that unless you get the invoice or the bill for it, it doesn't become an accounts payable on your side. So if you have a lot of purchase order outstanding that hasn't been billed yet, you might want to take into consideration your cash flow available for the amounts being ordered once they're billed. So that's another thing that you want to think about when regarding the purchase orders.
Right. Good point.
What is a receiving report?
Yeah, so the receiving report is the company's document once the product has been received. So on this, you want the quantity and the description of the goods shown, and it should be compared to the PO. So really, your receiving report should match your purchase order. And sometimes companies will send you a part of what you've ordered. So you might have more than one receiving report for a purchase order. And you don't want to get rid of that purchase order until all of the products have come in. Or you've got a credit for something if it's back ordered or whatever. And I mean, the main purpose of these reports, the receiving and the purchase order, is for you to be able to match, especially if you're not the only one that's doing purchasing in your company. It is very important that you are able to match all these documents together. First of all, for the purpose of control, to make sure that you're not the other person's not using the purchasing power for their own sake. That's right.
and again, for your cash flow to be able to track it.
Exactly.
What is the vendor's invoice?
Pretty straightforward. The supplier provides an invoice once they ship the goods to you, and it's going to give you the amount that you owe. Basically, that's the amount that you're going to put into your accounts payable.
These are bills as well, not necessarily just your for your cost of goods, but also your bill from ATCO, or those are considered vendors' invoices as well.
Exactly.
How can I ensure my accounts payable is accurate?
So we use a system called a three-way match. So basically, the documents that we talked about, the purchase order, the receiving reports, and the vendor's invoice, we want to match those three reports together. We want to make sure that the purchase order and the receiving report match, and then that the vendor's invoice that you get matches those two. And so whatever it is that you originally ordered, that's what you're getting billed for. You're not getting billed for anything more or anything less than that. So a good company with their accounts payable will have a different employee doing each of these positions. So, you'd have a different person doing a purchase order, a different person doing a receiving report, and a different person doing the vendor's invoice, looking it over, making sure it all matches together, and then a fourth person that's actually paying the invoices. But we know that we've talked about it before, so many small businesses, you're the only person doing it, or you don't have enough employees to have one person do each position. So it's so important to have a good bookkeeping system in place so that you can make sure that those transactions are all being taken care of properly, and that your accounts payable is where it should be, so that you can just take a quick look at it and see how much you actually pay to vendor or owe to vendors, sorry.
Yeah, absolutely. So I think that's all we have for today. Thanks for joining us for this episode, and please click like and subscribe. If you have any comments or questions, please write down below, and we'll see you guys next time.